I'm Charlotte McLeod with the Investing News Network, and here today with me is Brian Leni, founder of Junior Stock Review. Thank you so much for joining me. Great to see you.
Yeah, thank you for having me.
Of course. And to set the stage, we are here at VRIC in Vancouver. We're about, I think, halfway through the show, just over halfway through. I know you go to a lot of mining conferences, so what's your take on the sentiment downstairs?
Oh, I think it's great. I was actually pleasantly surprised to see how many people showed up yesterday, and then early this morning. It's great, and there's a lot of optimism in the air. A lot of the people I've talked to are talking about wins that they're sitting on, profits, and they're looking at a lot of, well, from the guys that I'm talking to at least, a lot of exploration, which to me means that people are feeling pretty good about the prospects of the future, and so it's very good.
Yeah, I've been feeling that too as well. I think it's positive sentiment here, which, we're coming off of 2022, which was an interesting year. And I want to ask about your approach to investing in the junior resource sector in 2022. And is it going to be the same in 2023? How are you looking at it?
Okay, so it was interesting. Towards the tail end of 2021 and the beginning of 2022, I saw that good news was being sold in the market, which was a problem. So for me, for about 10 months of 2022, I did nothing. I sat on my hands. I did a little bit of trading in names that I already owned, but I didn't make any new picks. And that strategy worked out really well. The end of the year, November and December, valuations had come right off, and there was a couple opportunities that I took. And it ended up being, in terms of timing, it ended up being very good. Those 3 picks that I made at the end of the year are all up. I think the lowest is 30% gain, and is really reflective of this little bump we've seen in the market. And so you can never tell where markets are headed in the short term, but I think when you see stuff like we saw in 2022, when news is used as a liquidity event, this is when investors need to pay attention and say, well, maybe my money isn't best deployed at this moment.
Okay, right. And as we look forward to 2023, then a little bit of a change in how you're approaching.
That's right. And I think there's still a lot of risk out there, but valuations, especially on the precious metal side of things, they're so low that I think the surprise probably will be further to the upside, and I think that's really nice to see. And even though the recession fears may be on the horizon, the battery metals and the base metals, there's still some very good opportunities out there that have tailed off because of the fear of recession. I don't even know if they necessarily, consider us being in a recession right now, but that fear is cascaded into the base metals, and so there's opportunity there too.
Okay, so we've got a lot of different directions we can go with this. I want to make a point about when we spoke at PDAC, which was in mid-2022, and I was asking you then, okay, who's seeing success right now? And you mentioned it's companies that are making discoveries. Right. So I was going to follow up on that theme that we touched on, especially because I was thinking, to make a discovery, you need to have money, and maybe that's a little bit hard to come by.
It is. But that statement still holds true, and it absolutely was true in 2022. If you were in the right exploration companies that made quality discoveries, you gained a lot of traction. And actually, one of the companies I invested last year has a component of exploration to it, and they attracted $16 million for further exploration. And so with the right drill hole, almost no matter where you are, what type of market you're in, you can attract attention if you hit a good drill hole. And I think that continues because, one of the big overriding themes I think moving forward is the fact that we just haven't made enough discoveries in the last 10 years. There hasn't been that money invested. And so I think with where the world is headed, people see that the money's gonna have to be spent. And we see governments not necessarily putting it in exploration, but they're putting it in development. And I think, that the people and investors seeing this, they know that exploration has to be the next step. They need to make those discoveries.
Okay, and so, we've already talked about a couple of sectors right now. And I think that I remember for you try to be sector agnostic, right? And look for companies that are seeing success no matter where they are. That's what you want to see. So we'll keep that in mind, but let's also think about which commodity you might be most excited about in this year.
For me, it's the precious metals, in particular gold. And my baseline thesis is to buy companies that are selling for less than they're worth. And typically with that, you're looking at commodities that are out of favor. With gold, even though it dropped back to $1,600, to me, I think it's still held up relatively well to that high or rising interest rate environment. And if you look at from a value perspective, that is where you can buy the best value in the resource sector, bar none. And especially in the developers, which is sort of a sweet spot for me. And you can buy ounces in the ground that are discovered, that they're progressing forward, versus the exploration companies, which come more risk, and they don't in fact have anything to justify necessarily their valuation. So I think that's where the opportunity is. And if I was an investor, that's where I would be looking for my due diligence right now, because I think that's where your best downside protection is.
Right, and maybe we can talk about the performance of the gold companies in relation to the gold price. You know, last time we talked, it was much lower. Today we're above 1900, and I believe well above it the last time I checked. So what are you seeing there?
That's a really good point. We've seen the gold price sort of rebound in the last 2 or 3 months, yet the gold equities have still, there's been some that have bumped up, but really they haven't picked up on the trail of the gold price. And I think that's really where the opportunity is. I think sort of no matter where we're headed in this world financially, I think gold is going to play a big part. And I think it's only a matter of time before that gold price increases further, and then the equities are going to have to catch up. And when they do, it's going to be a big move. The last 2 big ones we saw were in 2020 and 2016, and they were transformational in terms of my portfolio. And I think that opportunity is very bright right now. Who knows what happens in the short term, but I think over the next year it looks really good.
Right, and so one of the things that you started talking about was the possibility of a recession. So let's try to unpack that a little bit. There's a lot of talk about that swirling around here. What are your thoughts? Is that a 2023 thing? Are we in one right now?
Yeah, I would say that I'm not necessarily sure if you go by the standard definition or before they changed it last year, but the consecutive quarters of negative GDP, I would say, yeah, technically we probably are. But I don't think everybody has quite felt it yet. And we've seen CPI inflation come down in the States for, 3 or 4 consecutive months. And I think that trend is going to continue, because I think we're going to see an interest rate rise this week by the Fed. And I think that's going to further impact the market. Whether it completely unravels it, I'm not sure. But I think that trend is in the downwards direction right now. And that's going to have some impact on the economy and a lot of those trailing indicators that people tend to miss until it's right on them. Housing is going to be a big one, I think, and that will affect the market. But again, I think these are short-term things, because the Fed ultimately, I don't think is going to let the economy completely unravel, and therefore you might see a pause maybe a little bit sooner than we might expect.
Okay, and so we've been talking about this recession possibility. We're going to see what happens. That has an impact on industrial metals, right? And I think you started to say maybe that creates an opportunity among them. So can you talk a little bit more about that theme?
Yeah, so the recession, without a doubt, is going to affect the base metals in particular. The big ones, copper, nickel, and obviously with the electrification of our lives, these are metals that are going to play a huge part in it. And I absolutely believe that a recession would be a good thing for investors that are looking to deploy money, because it is going to trickle itself down into the producers, the developers, and the explorers, and it will be opportunity for those with the fortitude to go in there and buy them. And so I've got a watch list ready, and if they come to valuations that I deem acceptable, I'll start deploying cash. And that's the thing. You're not going to be able to pick the bottom either. And so you need to have maybe a tranche style approach to how you're going to buy those as they discount themselves. And don't worry about trying to catch that absolute bottom, because most people will be waiting until the market will have turned, and they'll think they've missed it. So yeah, that would be my approach.
Can you maybe get a little bit more specific on some of the industrial metals that people might want to keep an eye on? Because we've got options, as you're mentioning.
Absolutely. So I think there's definitely an opportunity in nickel. I think with security of supply and the push for low carbon footprint, I think nickel is really interesting, because I've had tempered optimism since last year because of Indonesia's push with this nickel matte product that they're using to enter the class 1 nickel market. And really it should bring some tempering to people's bullishness, because it's very real, but it comes with the proviso that it's much higher carbon footprint. This stuff is also located in across the world, for North America and Europe at least. and it comes with a much higher carbon footprint from delivery point of view. So domestic supply is going to matter, and it's going to matter even more if these sanctions and whatever's happening between East and West, as we kind of diverge, security supply means that much more. So nickel sulfide, these things are what we need for the battery markets as they are. And those domestic sources are few and far between. So I think there is a real opportunity there, particularly in the nickel and the copper, I should say, too. When you look at it really, like the copper, when you look at it from a domestic supply, there just isn't a lot out there to choose from, or at a point enough where you could see it developed in this next cycle. And so I think there's definite opportunity in those two metals, and especially for people in North America to look at those companies that are located in Canada and the States and are near that, let's say at least a PEA in development.
I think that's certainly a theme that we're seeing emerge, is that security of supply. So that makes a whole lot of sense to watch. I feel a little bit bad for copper because I hear it mentioned, it's like, and copper all the time. So I got to start asking about copper first. So, okay, we've gone through a lot of the things that you've got on your mind. Any other themes that you expect to see in the resource sector broadly this coming year?
You know what? I think a lot depends on how the Fed is going to move forward. And I think the narrative, at least, that we'll see will be recession-based and probably pretty negative. And again, I would see that as a great opportunity for investors that can see past, 3 to 6 months or 9 months, because I don't think that they're going to let it go or completely unravel. So a lot depends on what happens, this first quarter and how they move forward. And on the other side of things, I think precious metals, with where their valuations are, that is the best opportunity because, in my view, gold is the only real money. And especially in a society that seems to be headed towards CBDCs, I think people don't fully realize the importance of having physical money outside of the electronic system. And when they do realize this, I think that's when you'll see a big opportunity come to fruition in the precious metals.
And so just to clarify, when you're talking about precious metals, obviously referring to gold, what else are you including in there? Silver and the rest?
Yeah, although silver is becoming more and more industrial, and it's different, but it's different but the same. So it's still included, absolutely, when I say precious metals, but the silver market is definitely different, and that's both a good and a bad thing. So, but yeah, if I were, or I still am a buyer of precious metals, both are included. I focus more on the gold side of things, but definitely see the bullishness in the silver market.
Okay, perfect. I think that wraps it up for today. Thank you so much for coming on to talk about what you see going on in the resource space.
Thank you for having me.
Really great. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Brian Leni with Junior Stock Review.